Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. The cost of renting a home or apartment in the United States generally is going up. The rate of rent inflation is picking up speed in both urban and rural locations across the United States. In all four corners of the country, the geographic region in which we are experiencing the most significant trend increase, such as Austin, Texas. A teacher from Austin, Texas, said, "During the pandemic, a lot of people began to leave and actually the rent dropped that year by $100. And to make matters worse, only a small percentage of the newly constructed homes and construction projects can be afforded, despite the fact that rental demand is still robust. The new rental units being built tend to be more expensive or of a higher quality. While this is going on, wages for workers are not keeping up with rising housing costs." MISHEL, a distinguished fellow of Economic Policy Institute, said, "We had wage suppression for 40 years and then we have this period now where wages are growing, especially at the low end. And so the question is, how long will that continue? Rent rises, according to analysts, will have an influence on the economy." NOTHAFT, a chief economist of CoreLogic, said, "A lot of the monthly expense for the typical household is money that's going toward the rent or upkeep at the house, so it is a very important part of all consumer expenditures. In the most competitive markets, rents are on their way to new highs. In Gilbert, Arizona, one-bedroom rentals have risen about 116% in the previous year, making it more difficult for people to afford to live in smaller regions. Moreover, rent for a single-family home has increased at its fastest rate since 2005. According to Fundamental Logic, San Antonio and Charlotte, which grew swiftly because their workers had greater freedom to move around because of the recovery from the epidemic, are examples of places where significant software companies have relocated. As it turns out though, the story goes back even further to the Great Recession. Mark Zandi, chief economist of Moody's Analytics, said, "This has been building really since the end of the financial crisis. Back a little over a decade ago, a lot of communities have made it more difficult to build more homes closer to the urban quarters. Building materials, particularly lumber, has been in short supply. That's been a problem. Labor, a lot of people left the construction trades in the housing bust back a decade ago, and because of the changes in foreign immigration laws, we have a lot of fewer foreign immigrants coming into the country. Many of those folks would work in the construction trades. Also, a lot of smaller builders, they rely on loans from banks, and since the financial crisis, banks, particularly smaller banks, mid-sized banks, have been unable to, because of regulatory changes and other reasons, unable to provide enough loans. So there's a melange of things going on here. After the financial crisis of 2008, there were fewer possibilities for renters because by the end of the decade, especially in the most sought-after real estate markets, a big number of people moved to cities prior to COVID, and millennials prefer to stay in cities longer than previous generations because they couldn't get out and buy homes before COVID, because home prices were so high and demand in cities was so strong. Then the pandemic hit. And if you look at some of the high-rise apartment buildings in the really dense central business districts, you'll notice that big city sprints were actually declining in the first 12 months of the pandemic, while smaller cities like Phoenix and Austin receive more of those remote workers. This is because smaller cities are more affordable." Zandi said, "There's a lot of evidence that a lack of housing closer to where the demand is, urban cores, is having a meaningful negative consequence on long-term economic. So we can figure out a way to change zoning rules and laws and labor that we need and able to build closer to where the jobs are. Our economy will be able to grow more quickly, more strongly in the longer run." Renters in suburbs, which are traditionally more cheap, are also feeling the pressure from rising prices. According to those knowledgeable in the matter, today is a particularly difficult time to rent a property. The vacancy rates are the direct effect of a single individual speaking for an entire generation. After the pandemic has passed, it is projected that rents will continue their upward trend. Zandi said, "Fortunately, builders are ramping up their building. They can make a lot of money, with rents this high and house prices this high. So they have a lot of incentive to put up more homes. And that's happening slowly, but surely, we are seeing more homes put up. So that's a good sign. We've seen an increase in single-family housing starts. That's really important because that's the preferred housing structure during the pandemic. So having investors come in buying homes might maybe put some little upward pressure on home prices. Sure, maybe it does. But it does increase the stock of single-family rental homes available in the market, and should help to moderate rent growth. Real estate agents in urban regions are arguing whether or not to convert office districts with less foot traffic into residential neighborhoods. Lawrence Yun, chief economist of National Association of Realtors, said, "The idea is to say that there is some empty buildings, brick and mortars already established, but maybe one can repurpose it into residential units. Renters, with shorter terms, are impacted by the market. The majority of workers in the United States have seen little to no increase in their wages over the past few decades, making these raises particularly unwelcome news." Lawrence MISHEL said, "The wages and benefits of a typical worker were suppressed in the period 4 decades after 1979. Growth was very slow. There was growing inequality that worked against the middle, and in fact against anybody in the bottom 90%. In 2019, Oregon was the first state to establish statewide rent regulation, making it the first state overall to do so. They imposed a cap of approximately 7% on the amount that rent may go up in cities such as New York, San Francisco, and Washington, D.C. These systems offer a number of benefits. For example, one study found that rent control increased the likelihood of tenants remaining in their homes by 20%. The majority of economists, however, are of the opinion that rent control does more harm than good. Lawrence Yun said, "So what history has shown is that by putting a rent control, yes, it's benefit temporarily for people to pay lower rent, but that detours incentive to build more homes or provide money for maintenance. So all the housing stocks steadily deteriorates over time, and one does not want to see that. So we want to encourage more production. The remedy to rising rents could be in the labor market, because Congress and the Federal Reserve have poured money into the economy. Some workers should be able to earn greater pay in the future." MISHEL said, "There's been a huge increase in the demand for goods and services, so we're going to see a period of sustained low. Unemployment, I think, did that. This has always led to faster wage growth for those in the middle and the bottom. The other related question is, will we see the structural changes that are built into this economy, rather than be an episode of a period of low unemployment? And I think that will require improving labor standards, putting in the $15 minimum wage. We build and collective bargaining. I think it'll mean paying attention to maintaining low unemployment. To combat rising rents, it may be possible to get a raise or find roommates." Diana Olick said, "They're not building enough affordable housing right now, because for builders, the cost of construction is so high due to high cost. For materials shortages of labor, that they can't build affordable housing." Zandy added, "It took us 10 years to get into this, predicament. It's not going to be solved next year or the year after. It's going to be 10 years before we solve this problem." Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.